Let's analyze the stock market trading session for today, Thursday, March 24, 2022. This is a daily chart of the S&P 500, up almost 64 points today. It was a very strong day, back above the 200-day and the 5-day moving average. Just pushing around that high from 2 days ago. I remember I told you guys yesterday that there was no reason, even though it was a very weak day, weak close, that I didn't see any reason to be short as it closed around the 5-day moving average. And I did mention that it could easily gap up tomorrow and push higher, and which was the case today. It was a very strong day, closing at the high of day. If we go to the 5-day moving, not the 5-day, the 5-minute chart, you will see how strong the day was. Gapped up to gapped up in the morning, minor pullback. After that, it just trended higher all day long. Right before the close, look at that big rally. Going back to the daily chart, tomorrow I still no, of course, no reason to be short. At the same time, I don't really see a good reason to be long. This should be very strong resistance around between 45.30 and 45.50. That's the red trading range here. If we end up gapping tomorrow, I don't think I will go long, even though it could go higher. Just the fact that we moved too much, a quick 1 day drop and then going higher, I see that we can go higher, but are we going to have another momentum, another move with the same magnitude as this one? I don't see that happening. Perhaps if that's the case tomorrow, gap higher, push higher, and then reverse. That's a possibility, or maybe we can keep going higher. But for me, I will skip it. If, however, tomorrow we open lower and then push about this level from below, then that could be a good buying opportunity. If it decides to go south, this will be a very important pivot point around 45.50. That means it would have to dip below today's low and yesterday's low, back again below the 200-day moving average and the 5-day moving average. Conclusion, it wants to go higher. For the Nasdaq 100, a very strong day, was able to push above this pivot point from 2 days ago, close near the high of day. So this one is very, very strong. I mean, that was just even yesterday, it didn't even dip below the previous day's low. And then today made a new high above that level. It can continue higher. I'm not, even though it looks like it wants to go higher, I will not be buying this one. Such a big run, 1 day pullback or retracement, and then continuing higher. I don't see that as a good buying opportunity. I don't expect much upside momentum, upside from here. I think it's going to be more limited and can quickly reverse lower. So I'm staying away for now. If it pulls back from this level, I would expect the 50-day moving average, this green zone, to act as very strong support. Now, Dow Jones Industrial Average up 349 points, very strong bounce. I shouldn't say bounce, very strong day. Back above the 50-day moving average and above the 5-day moving average. Same as the other indices. Looks like this one wants to go higher, but it's still in this range, multi-day trading range. So it could find very strong resistance around this area, the 200-day moving average, the 100-day moving average. But for support, this could be very strong support. Just below that, That could even be a short. Let's now analyze the semiconductor index. This setup, been watching for 2 days, last couple of days. I did specify also that a push above the 200-day moving average would be a good buying opportunity. And that happened today. And I ended up buying. So I'm long via the SOXL ETF. That's a triple leverage ETF. So I'm long the semiconductor index, push above that level. And I ended up buying after the market closed. Very strong day, up 5% for the day. And look at the candle. Such a big candle, very strong, pushing back above all these moving averages and these pivot points. My stop loss is below today's low, just below that. That means that's my hard stop. Dips below that, and my order will get executed. I will quickly take my loss. In order for that to happen, that means that it would have to dip below all these layers of support, a pivot point, the 200-day, this pivot point, the 50, the 5. And I mean, if it does, then I want out, but is looking very strong. If this is the beginning of another upside wave, such as this one, it should not even dip below 34.50. Intraday, it could do that, but really it needs to remain above the 200-day moving average. Oh, and I just noticed this pattern. That's cup and handle. I don't really follow patterns. If you guys been following me for a while, I only trade based on pivot points, support resistance, and moving averages. But just noticed it because I used to trade these type of patterns. Well, I'm trading it now, but what I mean is that I really no longer look for patterns and I don't just buy just because it's a good pattern. For me, it's all about price levels and moving averages. Now, for the Russell 2000, today was not impressive. Yeah, bounced off the 203 price level. Didn't even get close to these moving averages. So that's good, but it's way below the high from 2 days ago. And it didn't even push above yesterday's high. Now is trading or close around the 5-day moving average. So this one doesn't look as bullish as the other indices, but it doesn't look bearish. Looks like it's just consolidating for now. If it would dip below, let me clear this. If it would start dipping below these moving averages, say around 201, then that would be not good. But so far, so good for the IWM ETF. Thanks for stopping by. I hope none of you guys are shorting this market. I don't really see a signal. A setup will come again eventually, but for now, the market is looking very strong. More upside. That's what the charts suggest. Thanks for stopping by, and good luck trading tomorrow.